This JTS Mortgage Minute is brought to you by JTS and Company Mortgage Brokers.
Welcome back to everyone. Jeff Farnham joins us now with the JTS Mortgage Minute. Jeff, good to see you.
You too, Bill. Yeah.
This week, let's hit on the younger generation for a little bit and talk about a question that a lot of them have. It's always seems to be a rule of thumb that you put your spouse on the mortgage. Now, is this always a good thing to do?
Well, not necessarily. I mean, it really depends. I mean, if you can and you're applying jointly, that's fine. But there's no requirement that you do that. In some cases, we have two borrowers that are applying, and one of them's credit may be in a better situation than the other's is. So in some cases, you can leave one or the other off of the application as a matter of trying to get them the best terms, the best rate, and those kind of things. So what happens is we look at all three credit scores from both borrowers. We take the middle score, and the lower of those two become the representative credit score for qualifying that person. So in some cases, depending on if there's a big difference in the credit score, sometimes it's better to drop that person off of the credit, off the note in the mortgage loan itself.
Now, if only one applies for the mortgage, can they still use the other's income without being a co-borrower?
No, if you're not applying on the loan, then we're not going to consider your income. So that's another factor we have to take into consideration. Can one person qualify on their own with their income and their credit if they can, and can get more favorable terms? And sometimes that could be a good way to go. But in either case, whether you're on the note and the loan itself, you would still be on title as a married couple. That's no problem to do, so that you're covering yourself from a title interest standpoint. But as far as building credit, if you can go on there jointly, then that's always good, especially for a young couple starting out trying to build their credit up. Having you on there jointly is good if it gives you the best opportunity.
Speaking of mortgages, what are the rates doing right now?
Well, we saw a little seesaw week last week. We started out with rates rising, and then they fell back off, and they rose again late Friday, and then Monday morning opened up a little weaker again. Not a whole lot of data this week to watch. We've got some auctions coming out later this week that we'll see how the foreign investment goes. But all in all, again, we're seeing rates in really low territories again. So we're doing some 15 years just under 3, and some depending on the type of loan and program, whatnot, and 30 years in the mid 3s to the low 4s, depending on credit score and the type of term there. So really, rates are very good for purchase and refinance opportunities.
Of course, we're focusing on the younger generation now, but if you're on the other end of that spectrum and you want a reverse mortgage, you can help them out with that too.
Absolutely. Again, we continue to see that, and it's a good vehicle for retirement planning. It's a good vehicle for sustaining life in the home versus going into assisted living, those kind of things at the end of life planning and those kind of things. But yeah, really simple to get information on that. Just call our office. We'll be glad to talk with you about that.
Good information as usual. And of course, if you missed last week's show, you can always go to their Facebook page, or you can check out their website at jts-co.com, or give them a call at 329-9090. Jeff, good to see you again.
Yeah, you too, Bill. Thank you.
We'll take a break. Come back with more in just a moment.